Hello investors, welcome to the channel where I use technical analysis to find possible swing trades. Today we're taking a look at Starbucks Corporation, ticker symbol SBUX. This is a large cap company worth $104 billion. It's known very well all around the world as one of the most accessible coffee houses and places to gather and use your computer and sponge off their free Wi-Fi. And here we are on Starbucks' annual chart, and you'll see the share price is well below all the major moving averages. It does look like it could be slowing down, but I would not be so bold as to make that assertion myself here. We have no idea what the market's doing lately, thanks to Jay Powell and the Fed, but it does show some signs of looking that way. In any case, the RSI is oversold and appears to be turning sideways, although it is just barely in the oversold zone. You'll see that that's pretty much all Starbucks gets to. The only 2 times in the last 52 weeks that it has touched oversold, it has barely glanced off that zone. The stochastics are both oversold and are going sideways, and the volume chart shows average volume, just a large amount of red lately. And the MACD is falling. It does not appear to have formed a trough yet, and certainly is not ascending. And we have no view of a bullish cross anytime soon. So it could well be that Starbucks will continue to fall. Now, the fundamentals here do support Starbucks as a decent business. You'll see there's very low short interest, 1.24%. and solid institutional ownership at a little over 71%. Now, it does not give us a comparison on the debt to other restaurants, but these are low numbers, all things considered. So even though we can't say whether the debt is high or low based on what we have here, this is not something that would concern me. And the PE ratio is still high, 27.76 PE, but Starbucks has traditionally commanded a premium from the market. I would like to see this come down further, but this may be as good as you're going to get. And the gross margin, surprisingly, gross margin is low relative to other restaurants. Gross margin of 26.52%. And that's all right. It's fair, but it is below average for the industry. Now, the operating margin, on the other hand, is the opposite. That is exceptionally high. Operating margin of 15.31% beats out 84% of other restaurants. That is solid. And I'll note here the net profit margin of 10.81% is also excellent. That is quite high for a restaurant. So keep that in mind. Now we look down here on the return on equity that I usually look at. It is also absent here, so we do not get a comparison, but we can look just below it here, return on invested capital. Many people love this metric as one of the most important numbers you can see. And here you'll see it's just shy of 20% return on invested capital. That is excellent. A 20% return annualized, that is a very solid return. So again, even though we don't get the return on equity, the ROIC is excellent. And the growth rate Starbucks is surprisingly low for the industry. It's less than 70% of other restaurants. So I know Starbucks has been expanding into China lately. So I'm a little surprised to see a growth rate that's comparatively low for the restaurant industry. But perhaps there's more data on that. If you know anything about Starbucks growth rate, please let me know in the comments. I'll be happy to share it with everyone. And we look down here at the dividend, you see a dividend of 2.5%. It's about twice the market average. Payout ratio just below 65%. It's a little higher payout ratio than I'd like to see, but that is not a distressing number at all by any stretch. So that is a secure and relatively high dividend. And finally, if we take a quick look at the last few years of earnings for Starbucks, you'll see here the earnings per share dropped last year. They're on track to increase. Now, if you look at the record here, see the earnings per share increased, and you see behind it and on the chart, the share price increased. And then the Earnings per share decreased from 2021 to 2022. And what happened? The share price also decreased. Now, it does look like there was an overcorrection here, and then the share price pulled back more into line with what it should be. And now what do we have? We have the company on track to increase earnings by a pretty significant degree, but the share price is declining. We know that the share price always follows the money. So when the earnings are finally in for the year, the share price should increase proportionately with the amount of revenue. So, and then we look down here, I should say earnings per share. If we look down here at the revenue and the cash flow, you'll see they follow, although 2021, 2022, they had the revenue increase and cash flow decrease. Again, that's inflation. We know the cost of doing business went up drastically. So even though they took in more money, they were able to keep less of it simply because costs increased. And I mean, it could be that the decrease in share price that we're seeing now is an expected decrease in cash flow for the company. However, we look at the annualized cash flow here at plus 4% over the last 5 years. If they can hold steady with that, then there should be no problem with the share price increasing. Same thing with the revenue growth rate here, annualized 5-year growth rate of 7.6%. So that is fairly solid. In any case, please let me know what you think of Starbucks in the comments below. And remember, none of this is financial advice. I'm not a financial advisor. I make these videos for education, information, and further discussion. If you get something out of the video, though, I would appreciate it if you'd hit the like button and subscribe to help out the channel. If you enjoyed this content, please hit the bell notification to be alerted when new videos post. Or if you'd like me to take a look at a particular company using these indicators, just mention that in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.